the Brit exit later that really kind of helped contribute to that. But at any rate, the point is this: is that whenever you trade, be aware, right? Because even if you do the best analysis, even if you're going out here and you're looking at everything, there's always the potential that you could be wrong and that something could go, not the way you plan, right? All right, so let's look back here at the once again at this pair. So this is what we're at. This is where we were at. This is what happened. So at the 3 a.m. mark, we went in and we looked and we said, okay, guess what? We're thinking that the market has hit a low and the market should be turning around and that we could potentially get into this pair now, right, and push it up, right? So we went in, right? We put our entry price a couple of pips above the high of the 3 a.m. candlestick, right? And we put our stop loss, instead of putting it below the 3 a.m. candlestick, what we actually did is went down towards the low of the day, which is at the 2 a.m. candlestick, and put it about 5 pips below there, right? So around about the, 7 a.m., we actually got into our position, all right? And then unfortunately, around about the 8 a.m. time frame, that's where we actually started to come down, right? And so if you think about it, and you look at the opening of the markets and going to the 8 a.m., I mean, that's really getting into the American Open around that time frame. And so obviously there's some information that was coming through the pipeline around that time frame that had a negative effect on this currency pair, and then proceeded to pull it down. And then unfortunately, by the time we got to the 10 o'clock hour, we actually hit our stop loss and then proceeded to come back up from there. And this is where we're at right now, where it's still making some lows now. Not lows now, but it's still coming down now. Hasn't retraced that low that it hit at 10 a.m., but it's coming back towards it. Now, when I initially looked at this one, I think we just talked about this, we were looking at where it was on the day, and it had made a significant low. And this is where we are right here, for today, which is Wednesday the 24th, right? So it still hasn't came as low as it previously had, and we're still right here by the support, right? So what I'm thinking and what I'm feeling, and I'll go back and I'll analyze this a little bit later, right, is that we, even though we were looking and I think we had the right assessment in place, I think we had the right information in place, which was going to be that the price was going to turn around. I think that what we did and what we should have done is maybe been a day later, if that makes sense, right? And what I mean by a day later is that this is where we're at today, or this is where we were at yesterday, this is where we're at today. And even though price hit that low yesterday, I don't think that the correction or the turnaround or U-turn is going to happen maybe until today or tomorrow, right? So we may have gotten in just a little bit early on this one right here, even though we were trading exactly what the market was giving us. Once again, it's still one of the situations where, whereas if you're early, you're wrong, and if you're late, you're wrong, right? Just want to check one thing real quick here, do some good housekeeping. For those of you who I just lost, I apologize. My feed went down and I was not aware. Let's see here. I'll check something here real quick. All right, guys, let me get back on this. Let's see. All right, guys, so look, we're back up and running again, which is a good thing. Sorry about that. Let me get back out of here and get over. All right, boom. All right, so let's get back to where we were at prior. All right, so we're going to get off of the Japanese, the Great Britain pound, Japanese yen. Let's look at this Great Britain pound, New Zealand dollar, see where we're going here with this one. All right. So once again, we got a stop loss in place. Woo-hoo-hoo. It looks scary, folks. I'm not even gonna lie to you, but we are coming close to our stop loss in this one right here. And once again, if we trigger that stop loss, we will take a loss in this one right here. But that's the whole purpose of having stop losses in place, right? Most people rationale would be that, hey, you know what, I'm getting close to my stop loss. Let me go ahead and move it down some more. You know, we could move it down to this lower price, this lower point here. I'm not going to advocate for that. And the reason being is because I know how much I'm willing to take a loss on this trade. And once I take the loss on this trade, that's it, I'm out. I don't want to take any more loss than what I have to, or any more loss than what I am had initially assessed myself to take. Even if it means me staying in the trade longer. And the reason being is because if you get in the habit of moving your stop losses, if you get in the habit of taking more losses than you had initially planned, then what's going to happen is you're going to develop a bad habit of doing that. And then what's going to happen is, instead of you trading with a logical plan effectively, you're going to just start trading this willy-nilly freestyle, which is going to just lead to additional losses and larger losses, which is eventually going to tank your account, right? Trust me, take the small losses, take them early, take them often. Don't worry about it. You can always recover from a loss, right? But what you can't recover from is if you take a huge loss and then, you know, it takes a tremendous return over time to try to build it back up, right? It's going to affect you mentally, and it's also going to affect you financially. So the best thing to do is to try to minimize your losses when you can. And then, like I said before, if you take them small, just take them. Take it on the chin. Yeah, it's okay. A loss, just remember, a loss is a loss. It's not anything that's going to destroy your account. At least it shouldn't, right? You should be able to take 10 or 15 losses in a row, and your account should still be okay. If you're not able to take multiple losses, you know, at any given time, then you're trading with accounts too small, or you're trading with lots that are too big. Either way, it's not good, right? And what you should do is go back and reassess, you know, your money management, you know, how much you're risking per trade, and then go back and adjust it accordingly and get back in the game, okay? This thing right here, I don't care what you see online or what you see, you know, people, you know, out there with the, you know, the fancy cars, the girls, the guys, whatever. It's not about making a windfall of money all at once, right? The key to this right here is compound growth over time. So that means just making profits, you know, over time, consistently over time, minimizing your losses consistently over time. And eventually what happens is that compound growth, that money that you build up over time, is going to boom. It's going to grow exponentially, right? Not linearly, but exponentially. And eventually you're going to have that money, that lifestyle, everything that you were looking to get. But it takes a little bit of time to get there, right? And give yourself that time. Don't sit out there and feel like that you have to have everything right away today, or your life is over, because that's not the case, okay? But anyway, so let's look at this one right here. Once again, we're looking at our 3 a.m. candlestick. We're going to look at where we were at yesterday at this time in the market. And if you notice here, we got a bit of an uptrend that was coming in place in the market, right? Here's a low. Here's a low. Here's a high. Here's a low. All right. Here's another high, higher low, because this low is higher than that previous low. All right. A higher high, because this high is higher than that previous high. And then here we have here, right, which appeared to be a higher low, right? Because here's the candlestick from the day before, which is lower, or which is higher than this previous candlestick here, right? Which this low. And then yesterday's low was actually higher than that previous low. So this right here is giving it the lower low, and then the candlestick today should get confirmation to that, right? Now, the question is this: will price, right, hit our stop loss? Now, once again, like I said before, we could go and we could pull our stop loss down, right, below this low point here, right? But I'm not going to do that. One, because I just don't want to get into the habit of adjusting my stop loss in a negative fashion, especially when I've already defined out what my risk is going to be. Because even though visually I'm looking at this and I'm saying, wow, you know what? I think that if we just pull our stop loss here below this low, right, because we've been making higher highs and higher lows, that we should be protected. We should be okay. I could do that, right? But here's the thing. What if I'm wrong on that, right? Because now I'm just, I'm getting emotional. I'm not even thinking about how much money I could potentially lose. And you might say, well, you know what, it's only be a couple of dollars more than what you're losing now. But you know what, though? Those couple of dollars add up. I'd rather go ahead and take the loss now, right? Get pushed out of this trade, come back into this trade, later today or whatever, right? As I go back through and reassess what went right, what went wrong, and then trade again, rather than go in, trade now, push this thing back now, and potentially take a bigger loss. Because guess what? If this right here is the market decides to, it's getting bad news coming in, and the market decides to crash through, this lower level here, all right, and I pull my stop loss down to this lower level. Guess what? Now I'm going to take a bigger loss that I had not planned for, and now it's going to take me longer to come back from this loss that I had not planned for. So that's the reason why we don't want to adjust those stops necessarily when price is moving against us, right? Now, this right was a situation where we had like some big news release that was coming out, and we're already in the trade, and we want to stay within the trade because we understand that when the economic news is released, it produces big swings in the market. The market goes up aggressively, it can go down aggressively. That might be a different situation, right? Maybe then, we want to adjust our stop, maybe so we can take on a little bit more risk, and we'll do that accordingly. But if not, we just want to take our loss, take our lumps, and keep going, man. You know what I'm saying? There's nothing wrong with taking a loss. It's not the end of the world. You can recover, and like I said before, if taking one loss is gonna destroy you, or taking one loss is going to cause you to be out of the game, well then that's not the trade you need to be making. You need to go back in, reassess how much money you're trading with, and whether or not you should be in that trade at all. Okay. So, but anyway, let's look at this here. Tuesday at 3 a.m. All right, here we go. Here we go. So this is Tuesday, 3 a.m. candle. All right. So once again, we came in, we assessed where we was at in the market. We determined that overall, even though the market was going down, that there was some structure here where the market was going up, but just at the moment it was going down, but it was in the process of U-turning, right? And so they gave us good cause to come in and to place our order. So what we did is we placed a entry buy order a couple of pips above the high of the 3 a.m. candlestick, and then we put our stop loss a couple pips below the 3 a.m. candlestick. And actually, we went below this low right here, right? And as you can see, right, around about 4 a.m., that's where we were able to go in and get our entry into the marketplace, right? And price proceeded up from there. And we actually came fairly close to our take profit, because here's our take profit right here. Remember, our take profit is in green, and our entry was here, and then our stop loss is in red. And so we actually came fairly close to our take profit. We're actually, how many pips away from our take profit? So we're about 23, 24 pips away from our take profit. But unfortunately, did not get executed. We did not get there, right? Because price after, or right there at the 8 o'clock hour, began to take a downturn, and it's been turning down ever since. So obviously something came through, some type of information came through the market that I wasn't privy to, that caused the market to turn down, right? Now, here's the other thing, and this is the thing I probably will take away the most from these London trades strategies, is that, I think the strategy does work. I think it is, you can potentially make money from the strategy, but as I said last week, I think that the best way to employ these strategies is kind of actively monitor the strategies, because as you can see, we did go through, right? We were making our way up to our take profit dollar amount. That would have been a good opportunity to just go ahead and push our stop loss from down here, and push it up to a risk-free trade, right? And that's easy to do, right? And that's actually the better course to do. That's the better move than to take our stop loss and pull it back, right, and possibly encourage us to have a larger loss. What we should be doing is locking in our profits, right, and pushing it up. So what I'm gonna do going forward And I talked about this a little bit last week, and I was like, I'm not going to do it just yet, but I think I'm going to do it now. Because I want to start using some of the software that we have here, right, to basically, do a trailing stop to lock in our profits. So that way, once we get into the green, we're going to lock in the profits that we have, and that way prevent us from having these deep losses like this. Because if we're going into the green, there's no reason why we should be taking a loss on a trade. No reason why, right? If we never got into the green, if we just, if it was like a little blip, little whipsaw where it goes up, it hits the, gets us into the market and then gets us right back out of the market, then I could see us taking a loss then. But when we get a situation like this right here, where we actually go up into the green, we actually close into the green, right? And then it takes us about 2 or 3 hours to get out of the green. There's no reason why we should be taking a loss like this right here, even if we're not at our terminal, right? So what we're going to do this week, we're going to go ahead and employ some of these trailing stops and things of that nature, see if we can make our trade a little bit more profitable. Looks like we're getting ready to touch this this stop loss right here, so we probably getting knocked out of this trade here shortly, but that's okay once again, because guess what? You know what? As long as you understand the basics of how to trade, as long as you understand what you're doing, you can take a loss and you can still come back from it. It's not a problem, man. Don't ever panic. Don't ever feel like you're so emotionally attached to a trade that you got to stay in it no matter what, and that you got to ride it all the way down. Don't ever ride it all the way down, because if you do that, you're just going to mess yourself up. You're going to mess your account up, and it's going to be that much harder for you to get back. It's going to be that much harder for you to be able to, emotionally be centered, right? And to get your confidence up to get back into the game, right? And it's all about, that's what it is, man. You got to get back into the game. Take a loss, get back into the game, man. That's why I'm so transparent with everything that I do here, because I want you guys to see the losses. I want you guys to see the wins, right? And then I want you to understand the logic, the thought process behind all of this, right? And I want you to understand that, hey, you know what, man? This guy right here could take a loss, but guess what? This dude can come back from a loss too, turn it into a profit. But it's not about trying to make sure that every trade you make, that because you're not going to win every trade you're going to make, right? And the whole purpose of doing the trailing stops on this right here, on these trades, going forward, is this way. I don't know, this is kind of baseball season over here in the States. So, we're getting to get into the playoffs and everything. So, to use that analogy about baseball, you just got to be able to get on base. You got to be able to get on base. And hey, Glencia, I think it's how you pronounce it. Glencia, I apologize if I'm pronouncing your name wrong, but hey, I want to welcome you. Thanks for coming and tuning in. If you got any questions, please feel free, to chat it up with us, and hopefully I can answer any questions you got. Hopefully, the information that's going to be given to you or that you're receiving from us today is going to be helpful for you with your trading. Also, too, if any of you are new to trading, if you have any questions about trading, there's a ton of free information is out there on the internet, right? Some of it good, some of it bad, right? I actually put together a course that gives you the basics of trading at our website at forextechmagazine.com. You can go there. You can download a free course as far as learning how to trade Forex, so that way you're familiar with the terminology, the jargon that we're using, familiar with what we're talking about when we discuss about price action, when we start talking about support and resistance, all that good stuff. It makes it easy. Okay, we just you guys saw that we just got out of that trade. So we took a loss on it. It is what it is, right? But anyway, go there. You can see that information. Go through it, look at it. Hopefully, it will help you become more familiarized with trading Forex, right? And if you're already familiar with trading Forex, it's a good refresher for folks that's been in the game, that's been trading for years. Okay, it's good information. Let's see here. So we get out of that one. Let's go to the other one that we're in, which is the Great Britain Pound US Dollar. Let's see what that looks like. How far away are we on that one? Once again, this one right here, same thing. You know what? There's no reason that we should have took a loss on this one right here. Definitely, if we use the trailing stops, loss could be prevented on this one. And what's going forward, that's what we'll use. Because what I'm noticing is that pretty much with all these pairs that we've been trading over the last couple of days is that we were in the money at some point, but just because I wasn't sitting in front of the screen monitoring the trade on an ongoing basis, when the trade turned, backwards, turned negative, we were on the losing side of that. We wanted to hit the stop loss and getting out. So, excuse me. one of the things that I want to do with these trades going forward is either and here's the thing we can do: we can either tighten up our take profit, right? And so instead of going for our maximum take profit, what we can do is go back, bring it in maybe half of that, right? So the take profit here was, let's see, you just gotta try to put it at a minimum of 50, right? This one right here was at 70. I'm sorry, we just say 70. So if we go from, let's say half of that is what, 35? Right. So yeah, that's the thing that we can do. We can either go, stick with our minimum, right? Or we can pick our price target, right, and then go and cut that in half, right? So that may cause us to leave some money on the table, but at least in most situations, I think going forward, it would almost guarantee that we're going to make something on each trade. Which once again, it goes back to my earlier statement about that when you're trading, it's not necessarily about going in and hitting those home runs. It's about getting those base hits, right? Like in baseball, right? If you get enough base hits, eventually, hey, you're gonna win the game, right? Because you're getting on base, and if you're getting on base, that means that you're getting on base and you bring somebody else in, right? And that's what it is. You keep hitting those base hits, get on base, get on base, get on base, and then eventually, hit that home run, and that's what we're gonna, and that's what we will do, right? But what we gotta do right now is get on base, especially in our situation because we're down, and we've been down over the last couple of days, and we need to go ahead and turn this around before we start our live account. That's what I want to do, okay? And so we will. So anyway, let's analyze this one right here real quickly before we start looking at what we're going to be planning on maybe doing today in the market. So Tuesday. So here's 3 a.m. candlestick, and as you can see, it looked like there was a bottom forming here, right? As you can see, right, prices was not going, anywhere. It was kind of like just sitting there, and then of course around 2 a.m. we had a good dip before it pushed back up. So that kind of let me know this right here is kind of a support area right here. It's a pretty good support area for the currency pair, which is cool, right? That's what we want. All right, and then we look on the daily chart. Boom, back. Same thing, right? So here's a low. This is considered a high, higher low, higher high. It's a lower high, right? It's a higher low, right? It's low, so it's kind of moving sideways a little bit. Boom, boom. And if you look at this situation right here, this is a little bit different. Even though it's kind of moving up and to the side, really what we're kind of getting into with this one right here right now is more of a kind of like a channel here, right? It's moving sideways. All right, so you see that, right? So this right here became a zone of support or area of support. This right here has become an area of resistance, right? Price goes up, it hits this area here, it pulls through a little bit, and then guess what? Boom, it goes back down because we got sellers coming in saying prices move too high, right? They want to sell, take a profit. Buyers come in, pushes it back up, boom, hits that wall of sellers, it goes back down. It comes back down to what? Price has gotten too low all of a sudden. So now you get buyers coming into the market and they push the price back up again. Boom, into that wall of resistance. Price goes down, comes back up, boom, sellers sell it again. It comes back down to where we at right now. So what is the probability? Is the probability good that it may go up or it's going to go down, right? Looking at this yesterday, the probability, the thought process was that, hey, if it came back down to a level that was previously support before in the past, right, and that at one time was resistance, but there's a good possibility that this right here could be a level of support now, right? This is what I want to do. I want to go in here. I want to look to buy. Because remember, if you look at some of the previous stuff that we talked about, we want to buy at support. We want to sell at resistance, right? We want to move with the market, not against the market, right? We want to go with our highest levels of probability, right? And so that's why we took the position that we wanted to buy yesterday, right? So if we look over here at our candle, right? Once again, we knew there was a bottoming coming in place right here, right? Because prices was not dropping any lower. And then at 2 a.m., it tried to drop, right? It hit that level of support, but guess what? It came back up. It pushed back up, right? Here we are at the 3 a.m. I'm sorry, not 3 a.m. It's at 4 a.m., right? Because we put our entry orders, a couple pips above our 3 a.m. candle high, right? And then what we did is we put our stop loss below that low of the day, that wick at the below of the day, right? And so when we came back in at let's see, at 4 a.m., it looks like that's when the order entry was hit. It was hit, right? Price began to move up. We came close to our take profit, and once again, our take profit was, what was this? We were how far away? About 27 pips away. Let's look at where we were away and then where we actually. So it was 67 pips altogether. So once again, let's just say 70 pips, right? So let's cut that thing in half. Let's say 70. So let's say 35. All right. So yeah, once again, so what I'm taking away from this right now is that in a couple things that we could do is either let me close this out. A couple things that we could do to make this trade better, to make sure we're more successful next time, to make sure we're at least getting on base with these trades. Because one, I'm looking at this trading strategy, and I see potential here, and I definitely think it can work. I don't know if it can necessarily work 100% the way that I've been seeing it displayed online, but I think that the adjustments that we need to make, the final adjustment that we need to make, to have some consistency with this trade, to have some consistency with the strategy rather, would be to initially let's cut our take profit in half. So in this situation right here is about 70, maybe cut it down to 35. We cut it down to 35, and you figure we're trading a standard account, it's $350 on each trade. It would have been nice to make that 670, but let's cut it down to 350 for each trade. And by us cutting it down, and even though we're not, even though the price may move far more than what we had placed our take profit at, the good thing is because we're taking a profit, because we're going, we're getting into the money on the trade, right? That's our base hits. That's us getting on base, and that's what we want to do. We just want to be able to get on base, right? Because if we get on base enough times, we're going to win the game, right? And where we at right now, that's going to be our strategy going forward. Is we're going to make sure that we're getting these base hits, that we're getting on, getting into the game, right? And then we can, sorry about that. Then once we get enough base hits, then we can start looking for some home runs here and there. Okay, so let's go back and recap where we at. So we see where price went up, and this is at the 7 o'clock hour, and then of course at the 8 o'clock, along with the other currency pairs, price began to retrace back, and it's kind of where we are right now, with prices steadily approaching this support zone here, right? And it hasn't pierced it yet. It's bounced off of it. It's came down to it. It's bounced off of it. So hopefully this thing right here could hold, right? We'll see. If it doesn't, we're gonna let it hit our stop loss. We'll take that loss, man. What I've been preaching the whole time that I've been with you guys, and what I've been preaching tonight is that we can take a loss. A loss is not a problem, right? The problem is that when we take excessive losses, right, unplanned for losses, right, we go in and we start moving our stop loss down, moving it back, because we get this gut feeling that the price is going to turn around any minute now, right? And it doesn't. And then because we take these massive losses, that it eats up our account. So the loss that we're going to take today, if we take one, is already something that we pre-planned for, right? And so we're okay with that. If that happens, not a problem. Okay, we'll take it, like a grown up, and we'll move on. Right. So what I want to do right now is I want to look at some other potential trades with the Great Brent Pound pair, right, for today, and see if there's any opportunities out there in the market for us to potentially make some money today. Okay, because remember, what we got to do is we got to recruit from these losses, man. Our account is down. Man, we're down like a big dog right now. So this right here is going to be one of those them big boy moments. Can we come back from this? And I'm gonna show you where we at right now. Let's see, where's that account history? Yeah. So right now we're down to $2,990. You know what I'm saying? Some money down. And you know what the cool thing is though, if you look at our losses, right? 500 there, 300 there, 700 there. That's like the largest one at 700, whatever. 5, 6, 4, 8, 2. Took it on the chin a couple of times, man. Took it on the chin a lot, but that's okay, right? You have multiple times where the account balance went down, right? And that rate is only shows for like the last week and a half or whatever. But we're only down, we're down less than $3,000, right? And the reason being is just because we took multiple losses, but because we actually did a good job as far as controlling our losses, making sure that the losses that we had didn't exceed our predetermined dollar amount that we were willing to take. And so that allowed us to still continue to stay in the game, allowed us to still continue to be able to trade, still allowed us to be able to trade with a standard account, which is very, very, very important. Okay? So let's get into this. The first thing we want to do when we go in and place a trade, or I'm sorry, when we go in and analyze the markets, we want to find out where we're at in the market. Now, you may have heard me talk about this multiple times, and you always will hear me talk about this multiple times. And the reason being because it's extremely, extremely important, right? Whenever you go into the mall or you go into a big business or a building someplace, one of the first things that you immediately would notice is there's a placard or a billboard or something somewhere, a kiosk, something somewhere, right? When you go to enter that building, that's going to basically have a sign that's going to say, you are here, right? And that you are here sign is just trying to help you identify where you are at in relations to, the rest of the businesses or the stores, departments, or office space, whatever, within that building, right? You're trying to give you some type of reference point to let you know where you're at and where your destination that you're trying to get to, where that is located at, right? So that way you'll know how to get there. When you first open up your charts, one of the first things you should do is you should start going through. You should start looking for, your support and resistance areas, right? You should be looking for that, right? Because that way, once you know where it is, right, you'll know, where you are at in regards to that market, right? You'll know whether you're close to support or whether you're close to resistance, right? And by you knowing that, whether you're close to support or resistance, that's going to help you determine whether you should be buying or selling that market, right? Because remember, if you're close to resistance, you don't want to be buying. You should be looking at selling, unless it's something that that we don't know is going on, right? And if you're close to support, you should be looking at buying and not selling, unless, of course, once again, the market is really heavy. There's a lot of selling that's been going on, and it's expected there's going to be some continued selling going on because maybe that support is not a major support, it's a minor support, and we're looking for the market to continue its downward momentum. Okay. Also, too, and I want to clear this out real quick. I want to do something real. I'll show you something really cool about this software, and I keep going back to the software, and also just FYI, full disclosure here. With the Smart Trader software, we are an affiliate of the Smart Trader software. For you to use the free version or the demo version of it, there's no cost associated with it. You just have to go up there and register, right? But if you do decide that you want to purchase it, and if you use our affiliate link to purchase it, then of course we will be compensated for your purchasing the software. But here's the thing: we really love this software, really believe in the software, and it's something I'd recommend to you, even if I wasn't an affiliate link for it, was an affiliate for it. and also keep in mind too that the money that we get paid for to help give this information to everyone for free. So look at this software. This actually comes on the demo version. You should get the demo version just so you can try some of the stuff out, right? This right gives you, this is your smart support resistance lines, right? So if you're having some problems identifying where you should, boom. How cool is that, right? 2 clicks, all of a sudden now I got support and resistance areas mapped out on my chart for me, right? Looking at this, now I can identify that we are definitely at an area of support, right? So if we know, based off our previous conversations, what should we be doing at support? Should we be selling at support? Should we be buying at support? Think about it. Remember, when you get to support, what happens? Buyers come in, push the price up, right? So of course, when we get here, And we've already seen where, we had a low, a high, higher low, higher high, higher low, higher high, higher low, higher high again, right? Higher low, higher high, higher low. So what should happen next? 9 times out of 10 should be going up to make our next higher high, potentially, right? So when I see this right here, this tells me that I should potentially be looking for opportunities to buy this market, right? Not gonna say it's gonna always work, right? Because we've seen in the past where we went in to buy the market, and just as short as my name is Lewis, and just as short as you're watching this channel, the market went against me and got bumped out of a trade, right? So it's not gonna always work. It's not always perfect. But once again, we're looking for probabilities. We're looking for the probability that, that percentage is saying that, it's more likely to happen than it is not to happen, right? And then we're looking at make sure that we manage our money effectively so that way, if it doesn't happen, we're not going to get knocked out of the game. We're not going to be just out there, just left to, fend for ourselves, right? So anyway, this right here is a potential buy. I'm not going to get into like the levels where we should buy at or whatever. But just kind of understand that I'm looking at potentially buying into this market right here, right? And if I place a trade, like I said, you guys know how I do. This been around for a minute. When I place my trades, I usually place them offline. But if I tell you I'm going to buy, that's what I'm looking at doing. Unless I go back in and something happens and I reassess and say, oh shit, you know what, I was wrong. I think I'm going to sell this one. But we'll look at it tomorrow together and see what I came up with today. If you guys are part of our mentoring program, then you guys are privy to the whole process when we get in and start. You'll see me do the what buys I'm going to make, what sales I'm going to make, and all that good stuff. If you're not, unfortunately, I'm sorry guys, can't share the information with you. It's kind of like information is reserved for the folks that's actually paying that paying a little bit of money to be able to gain access to that. Sorry. So once again, same thing here. Let's look at this, man. Wow, this is so cool, man. You come in, look at our support. Look at our resistance. Bam. So we're somewhere between support and resistance. Looks like we're once again, we're in the process. Looks like coming down from resistance, headed towards support. So I gotta ask you this question, man. Should I be buying here or should I be selling here? All right. 9 times out of 10, you should probably be thinking about selling here, but I'm going to show you something. This is really key right here, right? And this is why it's important that even though we have technology, right, that we still go in and we learn the basics, right? Can't be 100% dependent on technology, right? You got to use technology for what it is as a way to help us, right? But we can't be subjective to it, right? Because if you do, you miss out. And so what happens is the software itself is showing us these major areas of support, right? Definitely a support because price came down, hit the bottom, right? And this whole trend right here has been based off of this candlestick pushing up, right? And then here you see resistance. Market came up, pushed back down, bam. Market goes back up again. Comes up to this resistance line. Boom, goes back down. Comes back up again here. Goes back down. It's like it's kind of trading sideways until finally we get to where we're at right now, right? And so what the software does is showing you the major areas of resistance, right? But what I did is I came back in and I marked some minor areas of resistance, right? Because look here, right? And this movement of price, when it was coming down from this point here, price came back up, tried to retract, and bam, it had a downturn, right? Same thing, price went on its way up from this position here, right? Price came up, boom, hit some turbulence and came back down, right? And I felt like these right here are pretty important areas, right? Look like Grandma Sleepless at sale. Yeah, you're right. You're right. When we look at this right here, it looks like it could be definitely a sell, but because we hit this minor area of resistance right here, right? This could be an area where actually the market can U-turn, right? So that's why it's so important, so very, very important that when you come in, right? Because if you're just looking at this, imagine if you just kind of came in and you just looked at it like this right here, right? I probably would just sell. Right? It looks like, oh, you need to just sell, right? It's going down. It's been going down. Why not sell? Well, because this may actually be an area where the market starts to U-turn. And if you sell right now, you actually may be on the wrong side of things and get pushed out, right? It's not a bad analysis. But here's the thing. Here's the caveat with all of this, right? You could be right. I could be wrong. I could be right. You could be wrong, right? Only way we're gonna know is to let this thing play out, right? That's why it's so important that you have your money management in place, right? That you know how much you're willing to lose on each trade. You understand that if you lost this dollar amount here, what's the process to go back in and recoup that money at a later date, right? Because if you don't, and if you just trade without any stop losses, trade without any type of plan in place, what's going to happen is you're going to get in there, you're going to trade, you're going to lose more than you anticipated, right? And then you'll look and you see your account balance, depleted, and now all of a sudden, either A, you're not going to be able to get back in the trade because you're not going to have enough money in your account to do so, or B, you're just going to be so distraught because of the loss that you took. It's going to be hard for you to get back in there emotionally and mentally to put on a trade. So the best thing you can ever do for yourself is limit your losses, right? Second best thing you can do for yourself is come in, find out where you're at in the market, right? To make sure that you're not potentially at a U-turn, a market U-turn, right? Because what you don't want to do is you don't want to get caught out there. Okay. So this one right here is a potential buy. To be honest with you, I hate the Great Britain pound Japanese yen. Every time I trade it, it's like nothing good ever happens to me. So I probably won't trade this one at this time. I probably will leave this one alone. Let somebody who's a little bit smarter, better than me, do that. Whoever that person may be, wherever they may exist in life. Here's another one. This is the Great Britain pound Canadian dollar. This one right here is going to be tricky to trade tonight, and I'm going to tell you the reason why. Because guess what's happening tomorrow, folks? Right? Or today, rather. Later today. Bam! CAD, Bank of Canada rate decision. If you don't think this is going to be huge news, if you don't think this is going to have huge implications on this currency pair, then my friend, you are sleeping under a rock, right? You're not in the game if you don't understand that when this rate decision comes out, that it could move the market tremendously. If you don't think that, then you know what? You don't need to even be trading. You need to go back. You need to go back and reassess why you're trading, right? So, and the reason why I say that, yeah, there's groups of folks who pretty much already assessed and they pretty much got in their mind to say, okay, this is what's going to happen. Either A is going to, they're not going to increase their rate, or B, they're going to, increase their rate or whatever. A lot of the, how can I say it? A lot of the excitement, a lot of the whipsaw, that push from the market comes from not necessarily being right about the decision that's going to happen. It comes from the surprises that happen in the market. If the Canadian government all of a sudden decides that, hey, we want to cut our interest rate because the economy's not growing fast enough, or because oil prices are too high, or they say that, hey, we want to increase it because oil prices are high and we feel like it's gonna put an inflation push on our economy. It's gonna, whatever the case may be. If anything comes out counter to what the general rule of thought is, and it happens more often than not, if anything comes out counter to that, guess what? This pair is going to take off in either direction, right? This is not something I necessarily want to be trading in right now. I mean, I got my own assessment of what I think is going to happen with it, but I just keep it to myself for right now. This is something, though, that I would like to probably trade tomorrow after this news comes out, because guess what? We should have momentum then, because if they're raising the interest rate, and think about this right here, when we talk about raising or lowering interest rates for a currency pair, right? If they're raising the interest rates, that means that, okay, if I invest my money into that market over there, I'm getting a higher rate of return for my money, right? Because their interest rates are raised. Think about it, you go to the bank, right? If you go to a bank and one bank is paying you 1% interest on the money that you put in there, another bank is paying you 10% interest. Well, which bank are you going to put your money in? You're going to put your money in the one that pays the one, or you put the one in the that pays the 10. Put one in the 10. Let's see. Graham Wesley there says, does all currency fluctuate heavily? Is there anything that's more consistent without the dips? No, it's not really, because everything pretty much fluctuates on a day-to-day basis, right? Because what you're doing is you're looking at the buying potential of one currency compared to the buying potential of another currency, right? Since all countries pretty much trade with each other for the most part, and if they don't trade, then they use another currency as kind of like the intermediary to trade, goods and services for with another country. You're gonna have these little dips and dives in the market, which is okay, because that's what we want. Because when we have these little dips and dives in the market, that gives us opportunity to go in and to buy, right, or to go in and to sell, to make our money, right. This is what we want, right. That is a good thing for us. Okay. What we want to be able to do, though, is be able to get some consistency with our trading, so that way we can recognize that, you know what, if we are at a buying opportunity or if we're at a selling opportunity within the market. Okay. And then what we want to do is we want to be able to, like I said, we want to be able to ride that momentum, whether it's buying momentum or if it's selling momentum. We want to be able to ride it to a profit within the market. Okay. Well, look, guys, it's 4 a.m. and that's about my time for now. I apologize. I will say this right here. Looking at the other currency pair, we're going to stay out of the CAD for now. The Great Britain Canadian dollar. We're going to look at it tomorrow, reassess it after this information comes through as far as what they're going to do with their interest. The New Zealand dollar, the Great Britain pound, New Zealand dollar. That's the one I got tapped out of this morning earlier. I still say it's a buy, right? Here's a low, higher low, higher high, higher low, higher high, higher high, higher low. I still think it's a buy. But I may stay out of it today. I don't know. I got to go back in and reassess it. I'm going to go back in. I'm going to look at some of these things a little bit closer after I get off the stream with you guys to see if there's some opportunities there for us to trade. But I'm really kind of looking at maybe potentially buy the market today. At any rate, I want to leave you guys on a positive note. I want to thank everybody who was able to tune in today, and I want to thank everyone who's going to be looking at this at a later time for tuning in. If you haven't done so already, please follow us on Twitch, on our stream. Check us out on our Instagram page. Visit us on our YouTube, Facebook, Twitter. If it's a social media outlet out there, we pretty much are already out there on it. So, connect with us, please. We'd love to hear from you. We'd love to hear from any trades, or hear about any trades that you're making, or any trades that you're in, or any trades that you're potentially thinking about making. Love to hear from you. Also, too, like I said, I always like to try to leave on a positive note, give you something that I think that's motivational. And the person I'll leave with you today is a quote from Zig Ziglar. I know you guys heard me talk about this before, and I'm going to talk about it again because I think it's a really great quote. And it goes something like this right here. It says, fear, F-E-A-R, it has two meanings to it, right? For some people, fear means forget everything and run. And then for other folks, it means face everything and rise, right? So I don't know what category you're in today, right? I don't know if you're in the forget everything and run category or if you're in the face everything and rise category, but I hope you're in the face everything and rise category. And if you're not, I hope and pray that you get there, okay? Trading can be tough, just like life can be tough, right? And the whole purpose, the reason why we trade, and the whole purpose, the reason why we try to learn how to trade and learn how to be better traders, so that way we can provide a better lifestyle, not only for ourselves, but for our friends and for our family, right? A better future for ourselves, right? And the only way to be able to do that is we're going to have to go out and face our fears, right? We have to go out and look at a market that's really turbulent, look at some charts that maybe looks all crazy, right? But we can't be afraid to trade. Even after we took a loss, we can't be afraid to get back out there and get back in the game, right? We don't want to be emotional when we get back out there in the game, but we do want to be logical and methodical about what we do when we get back out in the game, right? So I encourage each and every one of you today that if you are facing some type of fear, some type of challenge, right, to have the strength, pray and hope that you have the strength to be able to face it, stick your chest out, and rise up to it, right? Anyway, man, God bless each and every one of you. Happy trading today. I hope you make a ton of money, right? And I'll check back in with you tomorrow. Take care. Bye.